Hey there, welcome back to another edition of our series. In this particular episode, we are discussing sophisticated financial controls for small law firms. In particular, we have a variety of the ways that you can measure and track your progress. And we're going to doing so here in front of the How to Manage a Small Law Firm dashboard with a lot of the metrics, the sort of the benchmarks that they have, and breaking all of that down into bite-sized digestible bits for you and your law firm. So with that said, Rjon, where do you think we should begin when it comes to financial controls when managing a small law firm?
Well, first of all, I think we should add more words to the title. It should be called Sophisticated Financial Controls for the Simple, Superiorly Successful Small Law Firm.
All right. We'll put it in the title after the fact.
There you go. All right. No, I want to preface this by saying, for all of the attorneys watching this, that I don't have an MBA. I don't have a CPA behind my name. I didn't study finance. I didn't study business. My undergraduate is communications law, economics, and government. And everything that I learned about financial controls of a business, I learned from the School of Hard Knocks. And I learned that there's a different way to learn about financial controls in a law firm. So there's the way that accountants and CPAs and finance people look at a set of financials, but that's not the only way, right? There's another way to look at financials. It's very, very different. It's very, very liberating. And as a person who, I mean, you know me well enough to know, you've seen me, I literally have to take off my socks and shoes to count to 20. I can't do math, right? But I've learned to become really, really good at making friends with the numbers and the metrics. And the cool thing is, if you will get someone, a bookkeeper, for example, to give you some basic numbers and some basic data, and you don't need much in the beginning, it becomes fun. I mean, lawyers are naturally analytical people. We love to investigate, we love to analyze, we love to ask questions, and our natural curiosity as investigators makes us much better at financial analysis than accountants. It really does.
Yeah.
You know, when you learn to start thinking about financial analysis as the same thing as conducting a deposition or cross-examining a witness, the skill set that makes you good at doing depositions and good at doing discovery and good at doing and good at cross-examining witnesses actually makes you really, really good at financial analysis and investigating and understanding and asking curious questions about the business of your law firm. So I just want to give everyone some encouragement. If you're like me and you went to law school because you're not good at math and you can't stand the sight of blood, you know, that's why all
I like it.
guys like me go to law school, right? You don't have to be good at math. You just have to be curious and interested, and it really opens up a whole new world of insight. And it's actually one of the most fun parts of my whole business nowadays, is really analyzing the numbers.
Because then you can see where you were, where you are, and where you're going based off of actually then creating projections based off of the elements and things that you're changing to improve your practice. It gives you more context. I think it gives you more confidence.
Yeah, so you're obviously a math finance guy because that's the way it looks to you. Me, as a non-math finance guy, what's interesting is just the analysis.
The process.
The analysis, the insight, the curiosity. It's just fun to investigate. And I wonder what would happen if I divided this number by this number. What might that show me? I wonder if I add this number and compare it to that for the same period last year, what difference do I see, and how might I be able to come up with a hypothesis or a theory of why that's different, and then how could I test it, right? It's the analytical person's delight. The only problem is that most lawyers don't do it because it involves numbers and they're afraid of numbers. Right. But getting the numbers, that's the job of the accountant. That's the job of the bookkeeper. That's the job if you have a good financial control software program. You don't have to be good at getting the numbers. You just need the numbers served up to you in a way that allows you to have fun with them. It's kind of like you like to cook, right? You don't like to cook
because
Monday through Friday.
Yeah,
you like to do special occasion cooking.
Correct.
Right?
Yeah.
I like to do special occasion cooking.
Yep.
You know what I love doing is I love going to cooking classes, like where they've got the cooking school.
I love those.
I don't have to do the shopping. I don't have to do the prep work.
Don't do the cleaning.
I don't really have to do the cleaning. I just get to show up and do fun stuff, right?
Yep.
That's what financial controls are when you think of it the way that I'm talking about here today.
Love it. So let's start with this. This is your financial control dashboard. Now, not all of these.
This is the financial control dashboard. We are in my office here in Miami, and this is our dashboard.
So not all of this will relate specifically to a law firm, because this is management of law firms. But I think there's a lot of the elements here that are worth sort of touching on that would very directly correlate or relate to what a small law firm experiences.
All of this will relate to some practice areas where they have monthly engagements. Almost all of this will relate to everyone else. There's some easy translations.
Yep. So where do you want to start? Just
so you want me to take you on a tour of this?
Let's do it.
Okay.
So I know you guys have programmers and dev people and software that you've created and all of these other elements. Why would you put your dashboards on a piece of glass?
Well, so it starts off digital. All of this data comes up through some management tools that we have created that we use to help to manage all of the law firms that we manage. And then it actually comes out of the computer, and once a month, our office manager literally sits here with a marker and a ruler and updates this dashboard. So it's actually extra work to do it this way rather than just leave it in the system where it comes from.
So then why do it?
Why do it? Well, first of all, you can't turn this off. You can't close this window. You can't really ignore it. And it's hard for the people on camera maybe to see this, but you can't really go anywhere in this office without passing by
right past it.
This dashboard. So everyone sees it every day, from the custodian who comes in to clean the office at night to the law firms that we manage who come into the office sometimes, to anyone else. This is for everyone to see, nothing hidden.
Why? Why would you want everyone to see it? Because some people want to keep things sort of close to the vest. What is the benefit of leaving it out there in the open?
Okay, well, so first of all, everyone who works for how to manage a small law firm, regardless of the role they're in, they understand how these numbers affect their job and affect their bonuses and affect their income and their career. And they understand how what they do affects these numbers. So everyone, this is like the touch point that everyone can rally around when they see the right numbers going up and the wrong numbers going down. Everyone can celebrate and get excited. That's why these numbers are out here. Now, why share the numbers? This is a philosophical point of view, and if you're watching this and you've never shared any numbers with your employees or your staff or your team, I don't suggest you start off by sharing everything. Start off with some simple stuff, right? Let everyone know the gross revenue, right? This was our gross revenue 3 years ago. This was our gross revenue last year. This is our gross revenue quarter by quarter by quarter. So they can just understand, are we aboard a rising tide ship or are we aboard a sinking ship?
Yep.
Right? Let them know how many open active cases you have, right? We're supposed to have 100 open active cases. We have 90 open active cases. That means we're at 90% capacity. Let them know every month how many cases you opened last month, how many cases you closed last month, so they can see, are we trending up? Are we trending down? Let them know the average time that cases remain open, right? Are the cases staying open for longer? Are the cases staying open for shorter periods of time? I mean, these are pretty innocuous pieces of information that give them a sense of the general well-being and direction of the business without necessarily, showing them your personal tax returns, right?
Yep.
Now, I share a lot more detailed information about profit margins and gross profits and things like that with my employees, because what I have found is that when I used to work at the Florida bar at the Law Office Management Assistance Service, I used to get calls almost every week from a lawyer, one or two lawyers. I want to start my own law firm. And I would always start off by trying to convince them not to start their own law firm. And if I couldn't convince them not to start their own law firm, I'd say, okay, why do you want to start your own law firm? And they say, well, because I want to make more money, right? People who want to start their own law firm, they either want to start their own law firm because they want to make more money,
Yep.
or because they want to be captain of their own ship, control of their time, or because they want to have more control of the kinds of cases and the kind of work they do. But the people who say, because I want to make more money, they're a funny bunch, right? Because most of them failed to make a distinction between gross revenue, gross profit, and net operating income, right? And they'd say, well, I make, making this up, I make a $75,000 salary, and I build $300,000 for the firm, and I want $300,000. Why should they get all that extra money? And then I start talking about the cost of marketing, and then I start talking about the cost of running a firm, and then I start talking about the cost of sales, and then I start talking about the cost of their paralegal, and the cost of the rework that they didn't bill for, and I start talking about the cost of their benefits, and I start talking about concepts like cost of goods sold and gross profit margins, and pretty soon
They're glazed over?
No, pretty soon what I'm saying to them is, you should probably keep your mouth shut because you're actually getting overpaid. I actually was at the National CLE Speaking Tour. When I was on the National CLE Speaking Tour, I was in a room of about 200 or 300 lawyers, and there was a lawyer who raised her hand, and she was making a big thing of this, and her partner, or the owner of her firm, was with her, and I said to her, do you really want to have this conversation? She was adamant she did, because she was sure that I was going to prove to him how underpaid she was. And by the end of it, the numbers were like, he's looking at her like, I'm overpaying you, because she had completely conflated and mixed together the difference between gross revenue. Anyway, the point I'm trying to make here is I don't mind. I like sharing my cost of goods sold. I like talking about my gross profit margins and other expenses, static overhead versus dynamic overhead,
Yep.
and things like that. Because what I know from having spoken with thousands and thousands and thousands of lawyers and thousands and thousands and thousands of their employees is that most employees in a law firm, if they hear the law firm grossed $1 million, you know how much they think the owner of the law firm put into their pocket?
Yeah, $1 million.
They think the owner of the law firm put $1 million directly into their pocket.
They love to do the addition, not the subtraction.
Don't even try to use rational logic, common sense. Don't use any intelligent thinking here to try to make sense of this. I'm just telling you that if you tell your staff that your firm grossed X, a percentage of them are going to think that's how much you put in your pocket, and they're not even going to consider income taxes, much less their salary and the cost of running the place.
Yep.
So yeah, I like to get into that with my employees because I want them to be empowered to understand, and I want them to be sensitive to why things that matter to me matter so much to me, and why things that don't matter to me don't matter that much to me. Anyway, so what was your question again?
So
you want me to walk you through this?
So this is like one of the primary ones right here. So let's just start with this element right here.
I will use this as a pointer. Good thing we planned ahead. Put that there.
Yeah, right.
So just so we're clear, this is January 2023.
Correct.
Just so everyone knows. So this is always a lagging report, right? This is always from last month, and it typically goes up around the 15th of the next month.
Yep.
So it takes about 15 days for my accounting team. Well, they get all their books closed by the 5th of the month, and then some point in the following week, this goes up, right?
Yep.
So December of 2022, we had a total of 620 law firms under management. So for a law firm, you would say in December of 2022, we had 620 open active cases under management. I'm trying to translate what I do to what a law firm does. 380 were in C-suite. That means they either have a CEO, COO, CEO, COO, CFO, and or CMO. And 240 were in our program called Small Law Firm University. We had a total of 614 paying members. So that means 6 of the 620 members were members, but they didn't pay that month. They might have had a health issue or something like that.
Yep.
Okay. As you can see, our monthly recurring revenue, our contracted monthly recurring revenue was $2.2 million, and we collected $2.1 million. Contracted was 2.2, sorry. Contracted was 2.2, invoice was 2.1, and we collected 2.103, and we collected 2.102. So it was a 99% collection rate, right? So what this would translate to for a law firm is instead of contracted monthly recurring revenue, you would say this is how much retail value work got done. These were the billables, right? If every hour that got produced got billed and got paid, it would be $2.234 million. Invoiced. This is the difference between this line and this line is what gets written down.
Yeah, write some things off.
You write some things down, you write some things off. So in this case, it's the difference between $234,000 and $103,000, and I can't do the math well enough to tell you what that number is, but it's like $120,000, right?
Give or take.
Of the invoiced, of the money that got, of the bills that went out, of the work that got invoiced, which was $2.103 million, $2.102 million actually got collected, right? So 99% of paying members, 614 is 99% of 620.
Yep.
And cash collected is we collected 99% of the money that we sent invoices for. And so you can see how that translates into a law firm, whether they're billing flat fee, whether they're billing on a monthly retainer or hourly. It's a different conversation for a contingency firm, but you'd still, for a contingency firm, want to know how many open active cases did you have. You'd still want to know, of the open active cases, how much were you projecting to collect, because you should be doing your projections a year in advance, 9 months in advance, 6 months in advance. Every quarter you should be recasting your projections for how much revenue you should be getting from all your cases on a contingency case. So that's the number that you'd put in here.
So what are the metrics here, especially, that a law firm should be targeting? Because 99% collection is pretty dang good. You really can't, there's not a whole lot of room for improvement.
A law firm should be targeting 99% collection.
What do you see most of the time? Before someone comes in to work with how to manage a small law firm, what do they come in at? And then obviously we'd like to have them here, but what is like a benchmark across the industry on billables actually collected?
Like 70%, 80% is what most law firms consider to be, if most law firms get 80% of what they bill,
invoice, yeah,
they think they're doing pretty good. That's pretty sad. It should be like 95 to 99%.
Well, if it's 80%, they're basically like writing down and writing off 1/5 of all of the work that is being billed, invoiced, etc.
Yeah, that's almost. They're writing off half of their profits are going down the toilet.
That's what I was going to get at next. If you have then all of a sudden whatever profit you actually are operating off of goes significantly lower. So it's in the attorney
for every dollar that you write off or don't collect, for every dollar that you write off or every dollar that you bill but don't collect, there is a cost of goods sold associated with that. So it's kind of like when the restaurant brings you a plate of food, right? And you don't like the plate of food and they take it away and they don't charge you for the plate of food. They still paid for the chicken, the rice, the vegetables, the time for the cook to cook it, and the time for the dishwasher to wash it, and the time for the server to serve it. They still had a plate cost to deliver you a plate of food. You still have a cost of goods sold. So for every dollar you write off, it really costs you more.
Yep. Directly the bottom line, the profit is really more what it comes down to.
Right, which then starves the business, which then starves the law firm of the ability to commit to long-term sustainable marketing strategies, which means that the marketing is coming and going, which means that there's feast or famine with prospective new clients coming in the door.
Sales gets diminished.
Well, what's worse is you get a prospective new client who comes in the door and you shouldn't take this person on as a client. You know this isn't the right case for your firm, but cash is tight and they're a paying client right in front of you. So you take the client, you take the case, and next thing you know, you're having an uncomfortable conversation with your legal malpractice insurance carrier on the case that you knew you shouldn't have taken, but for the fact that you allowed your collection rate to drop and you weren't tracking the fact that your cases were dwindling and dwindling and dwindling and dwindling. And so you waited too long to do something about it.
That is a tale as old as time in the legal malpractice space. It's like, well, I just thought it was one thing, I needed it, and
yeah, exactly.
That's it.
All right, so this is just kind of a big picture.
Where do you want to go next?
Let's go over there.
Okay.
So this is the total number of members that we have. As you can see, in December, it was 620. By the way, that number is now 620, 40, 60. It's like 665 at this point because we enrolled a bunch of new members at the January live quarterly meeting. But anyway, in December, it was 620 members. And as you can see, January 2023, that number will go up to around 660, be right up around there. But look at where we were in January of 2020. Yep. We're at 400 and, what does that say? 402?
403.
403 members. I mean, we've grown by 50% number of members in 24 months. Well, that's something that I want every time we bring in a candidate to recruit them, I want them to see that. Every time we bring in any of our current members, I want them to see that. Anytime I want everyone to see that. Everyone should know that they are part of something that's growing. And I mean, look at this. Look at that angle, right? Who wouldn't want to be part of something like that? So here with a law firm, you'd count the total number of open active cases. Let's say that in January you have 660 open active cases, January 2023. And then you say January 2022, you had 553 open active cases. And then January of
2021 would be
2021, 448 open active cases.
And 443,
right.
403.
I mean, this is something that you want to keep track of, right? Because in a law firm, this also speaks to your labor cost ratio, which we're going to get to. Let's say the average attorney in your firm can handle, I'm just making this up, 100 open active cases, right? Well, that means you better have 7 attorneys, right? If you started with 4 attorneys and you still have 4 attorneys, that means you got 4 attorneys all ready to burn out and the wheels are going to fall off.
Yep.
Right? So you got to be watching these trends so you can project and anticipate your hiring needs, your recruiting needs, your training costs, your physical plant needs. This is a very, very important number for a lot of different reasons to keep track of, and any law firm can keep track of this.
And it also, if 100 was the max, and they are doing more than that, that creates additional malpractice issues. Sort of circling back to that.
Exactly.
I just missed it. So many things on my plate.
It's like the people. It's like the doctors or the medical students who they work them 48-hour shifts and then they commit malpractice, medical malpractice. They leave a sponge inside of someone because they're sleep deprived. I mean, this is how you avoid those stupid, avoidable, embarrassing errors.
Yep.
As well as staff turnover and everything else. Okay, so that's a great number there. Right here.
Monthly labor and cost ratio.
Labor cost ratio. And notice that just in case you don't know,
lower is better.
Lower is better, right?
Yep.
Just make it real clear, lower is better. You don't have to use complicated formulas. You can translate it and make it really simple so that everyone can understand it. Everyone on my team knows when this number goes up, we're happy, and when this number goes down, we're happy, because that one says lower is better. I guess this one could say higher is better, except I think it's pretty self-evident.
Yeah.
All right, so labor cost ratio. So what you want to do is you want to see that you are producing more revenue with fewer people, or the same number of people are producing more revenue. This goes back to an interview we did over lunch when we talk about, is your business growing or is your business scaling, right? This is where you see when you're starting to hit scale versus growth. So see that back in 2020, our labor cost ratio was 70%, and then it went up to 75%. Holy crap. Now it's down to, fuck yeah, 50%. That's where I want it. Now I want it even lower, right? This tells me my team is getting better. This tells me my team is getting more productive. This tells me my team is getting more efficient, right?
Is there a dollar per employee that you like to target, like in revenue? So for every employee, you want to see $200,000 in revenue?
Yeah, but that's different for every firm.
Yeah, I'm just
and also, I want to just add something. Part of the reason why my labor cost ratio spiked here is because we were hiring. Look at this. We were hiring. See this? We were staffing up in anticipation of growth, because brace yourself for this. You ready? That marketing plan we had, we actually thought it was going to work. But it's amazing how many people, they come up with this big marketing plan, they give all this money to all these marketing vendors, but they don't actually demonstrate any faith that they expect it to work by hiring and staffing and getting ready for it to work. There's a thing in the Bible where Jesus said, before you pray for rain, dig the ditches. Expect there to be rain, right? It's amazing how many people, they spend hundreds of hours a year, meeting with every marketing vendor under the sun, pouring all kinds of money into marketing vendors, praying for it to rain, but they won't even dig the ditches and prepare themselves for the bounty to come. So you can see here, the labor cost ratio spiked, and we were hiring in anticipation of growth, and sure enough, the growth happened.
Wouldn't you know?
Surprise, surprise. Cost of acquisition. Now, this number is a little bit messed up. And I don't mean it's inaccurate, I mean it's messed up.
When you say cost of acquisition, you're saying the cost of acquiring a new client.
Yes. So our historical cost of acquiring a new member is around $2,500. Cost is around $2,500 to acquire a new member. As you can see, it's sitting here at $11,000 right now. Now, that's misleading. And the reason it's misleading is because we fired our entire marketing team back here. So we basically been running for 2 years with like practically no marketing team. And that's skewing our cost of acquisition. So that's all messed up. So
Yep.
that's like a...
You're tracking it, but you're not putting a whole lot of weight on it.
I'm tracking it, but what it tells me is not that I'm paying too much to acquire members. What it tells me is I desperately need to hire and build up a marketing team. All right, that's that. All right. So anyway, for a law firm, yeah, I mean, this is pretty straightforward. You can
easy.
keep track of your monthly labor cost ratio, right? How much, if you generated $100,000, if you paid $100,000, let's use a different number that most small law firms can relate to. If you paid $10,000 in labor cost, and that $10,000 in labor cost produced $20,000 in revenue, what would your labor cost ratio be? 50%, right? If that same $10,000 in labor cost produced $30,000 in revenue,
33%.
you'd have a 33% labor cost ratio. Lower is better, right?
Yep.
So what you want to be careful of, though, is to make sure you don't quash your labor cost ratio at the expense of growth.
Yep.
Exactly.
What are the metrics that a small law firm should stay inside, or like, at least the bumpers?
Typically about a third.
Okay.
Yeah. Typically about 33% labor cost ratio for a small law firm.
And
Unless
that's not paying themselves. That is
no,
labor.
that includes the owner's W-2 salary.
Okay.
It doesn't include the owner. It doesn't include profits that the owner takes out of the firm, but it includes all W-2 salaries,
Okay.
including the W-2 salary that the owner of the law firm should be paying themselves. By the way, one of the quickest ways to increase the revenues and increase the profits of a small law firm where the owner is not currently on payroll is to put them on payroll. When the owner of a law firm, when we can get the owner of a small law firm to put themselves on payroll, I don't care if it's $10,000 a month, $5,000 a month, $3,000 a month, as soon as they put themselves on a monthly, on a payroll where every 2 weeks they're getting paid right along with everyone else, always, without exception, revenues go up, profits go up.
Because there's a psychological shift that happens of there's just the difference that ends up occurring.
It's such a long conversation. I'm just telling you it always works.
Yeah, sure.
Right. Like I could probably explain to you why the lights go on when you flip the switch. It would involve electrons and wires and circuits and, all kinds of complicated stuff. Or I could just tell you, every time you flip that switch, the lights go on. All right. Labor cost ratio. So every law firm should be keeping track of
About
a labor.
a third, though.
Small law firms about a third. And I would highly recommend that you include outside vendors in your labor cost. So for example, the monthly retainer that our members pay for how to manage to serve as CEO and COO and CFO and CMO, we're part of the labor cost. We are on the org chart of the law firm.
Yep.
If a law firm hires an outside marketing vendor because they're not yet ready to have a full-time in-house director of marketing, that marketing vendor goes on there, right? Don't get caught up on W-2, 1099, doesn't matter. If the expense is for labor to make the firm run,
Independent contractor, W-2,
just
lump
throw it
in
in
here.
there. Yeah.
Yep.
We're not trying to be gap compliant. We're trying to get a useful insight and understanding of what's going on in the firm.
Yep.
Are we getting more for our money this month, this quarter, or less for our money this month, this quarter? That's what that tells us.
Love it.
All right. Attrition rate. So here, lower is better. See? Less is better. And this, by the way, only tracks our C-suite services. It doesn't track, this is not tracking our small law firm university. We just haven't built that chart out yet. But so you start off with a baseline, what your projection is, right?
So your projection is 8.
We start the year with the projection of losing 8 members per month. If we lose more than 8 members per month, that's bad. If we lose less than 8 members per month, that's good. And as you can see, it kind of goes up and down and up and down and up and down and up and down and up and down. Right here, we spiked because we did a price adjustment, January of 2022. So you see a spike, right? And then it goes back to normal. It actually got lower and lower and lower. But here's the thing that you got to see right here. Right there, that says monthly variance, and that says year-to-date variance. This is how I avoid losing my mind. This is the number one most important sanity indicator, the year-to-date variance, right? Because the up and down, I mean, look at this. I'm just going to trace it for those, because they might not be able to see. It goes down, and then up, and then up, and then down, and then it stays level, and then goes down, and then it goes up, and then goes down, and then goes down. I mean, this is going to drive you insane, right? Year-to-date variance. So look at this. Which is better?
Less, yeah.
And where are we in December of 2022?
Negative 17.
Negative 17 year-to-date, right? So
That means your attrition is better
So we lost 17 fewer members
than what you projected.
than we were projecting at the beginning of the year. So notwithstanding the ups and the downs and the downs and the ups and the months where we were way over and the months where we were below, year to date, we killed it, and we retained 17 members more than we were projecting.
2 months worth of projected attrition is basically what you saved.
There you go. So for law firms that are doing monthly engagement services, there's an obvious translation here. For a law firm that is billing by the hour, I don't know that would be that relevant. But the point is, anything you're tracking on a monthly basis, you want to have a projection, and you want to have a monthly variance, and you got to have that year-to-date variance, because without the year-to-date variance, you're going to lose your mind.
Yep. Love it.
All right. So this is directly transferable to any law firm, right? So for us, it's how much revenue we earned versus how much revenue we collected. Now, as you can see, 99% retention, 99% collection rate, these numbers are very, very close to one another, right?
But they weren't always.
No. Before we started recording, I told you the story. So this only goes back to 2020.
Yep.
If we could draw this back to 2019, 2018, 2017, 2016, 2015, I mean, these numbers were very far apart back in 2012, 2013, 2014. They've been converging little by little by little by little, month by month by month, quarter by quarter by quarter. So like all the things you do to improve your billing processes, all the things you do to improve your financial controls, all the things you do to improve your client communications, all the things you do to improve your sales process so there's a better understanding of the client about the value you're delivering. All the things you're doing to make your firm more profitable from a financial controls and collections standpoint, it all shows up here. I mean, I take tremendous pride. I mean, I can't even tell you, I take tremendous pride in the work that this represents. This represents so much work to get to this point, and you can see it, right? And the whole finance team takes pride in this chart. And the whole organization who get their bonuses, and they get their amazing health insurance benefits, and they get their training budgets, and they get all the latest equipment that they want, they understand that this is what helps pay for it. And so this is a really important number, and any law firm can keep track of it. It's how much revenue did you earn versus how much money did you actually collect, and obviously you want to get it to 100%.
Yep. Pretty straightforward.
All right, very straightforward. Okay, monthly activity. This is really, really, really interesting, by the way. I'll show you why in a second. You can see all kinds of fascinating things right here. So with How to Manage a Small Law Firm, our members get programmed deliverables. So if you have a CEO, for example, you have a monthly standing call with your CEO for about 90 minutes. You have a check-in twice a month for 30 minutes and 30 minutes.
Okay.
In Small Law Firm University, for example, you get a monthly check-in with your small law firm management advisor. Make sense?
Yep.
So we take the number of members we have times however many calls per program, CEO, COO, CFO, CMO, blah, 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 blah.
Yep.
And blue is the number of calls that we are budgeted to deliver. And red is how many calls we actually deliver. Calls, Zoom meetings, same difference.
Yep.
You understand what I'm saying?
Yep.
So you do the same thing in a law firm, right? This is the realization rate of your attorneys, right? So if you're budgeting for your attorneys to produce, let's say 1,400 billable hours, and you have 10 attorneys, then the firm is supposed to do, or let's say 1,200 billable hours. I'm just going to say 1,200 just to make the math easy. If you're expecting the attorney to do 1,200 billable hours in a year, that means they're going to do 100 billable hours a month,
Yep.
right? So blue would be 100 billable hours a month is what we're budgeting and projecting. Red would tell you how many hours the attorney actually billed and produced that month. That tells you how much, if you're doing this for a law firm, it tells you how productive your lawyers are actually being. And you could do this for paralegals as well, anyone who generates revenue. With How to Manage a Small Law Firm, what this tells us is it tells us how much people are consuming the services they pay for. All right?
Yep.
So watch this. This is what's interesting. You ready? Do you see my little pinky finger?
Yep.
See how my little pinky finger kind of like, it's about the width of my little pinky finger?
Yep.
Maybe here it gets a little bit bigger, but then it goes a little bit smaller. It's like, about the size of my middle finger, pinky finger, ring finger, right? Like about that. Except here. Guess what happened here? Look what happened.
You're doing a lot more calls than what you had contracted to
Because
actually
what
deliver.
happened? You remember what happened back then?
Your marketing staff.
No, what happened? Back in 2020, give you a hint, you wore a mask, you stayed indoors.
Oh, yeah, COVID.
COVID.
Yeah.
The pandemic hit. All of a sudden, you see that? That's January of 2020, when we all didn't know that there was such a thing called the pandemic. That was March of 2020, right there in March.
Yeah.
Boom, number of calls delivered exceeds, for the first time ever in the history of this business, exceeds the number of calls budgeted. And it stayed that way until, boom,
October, November
of 2020, which is when most of us were allowed to go out and resume some semblance of normal life, and it went right back to the historical average of about, a middle finger, thumb distance between them two. You get what I'm saying?
Yeah.
So here's the thing. I saw this month after month after month, and I realized, I should say my team realized, our CEOs and COOs and CFOs who are serving our members. We have 50 of the most amazing CEOs and COOs, all with law firm, like these are former professional legal administrators and former CFOs for law firms who provide our services to our members. We could see they were going to burn out. So we had to start rotating them. We had to start giving them weeks off. We had to start creating special programs to deliver things for our members and force our whole team to take a week off. So we took a whole week in here, and the whole senior leadership team of the company stepped up, and we did a week of basically like a workshop-a-thon for our members. And we told all of our business management advisors, you are taking a week off, because we can see what's going to happen. They're going to burn out.
Yep.
You got to keep track of what's going on. It shows you what's happening. And then here, this is really cool. These are the number of members that broke the $1 million gross revenue for the first time last year.
Calendar year.
It actually ended up being 53 because 10 more hit it during the month of December. Remember, this number is for the month of November.
Yep.
So we ended up with 53 law firms. 53 of our 600 law firms broke the seven-figure barrier for the first time ever in their whole career, and we saw that going. And then 20 of them broke the seven-figure barrier for the first time
$1 million month.
in November.
Wow.
And you could just see this number. It's just, anyway, you can keep track of all kinds of stuff. It doesn't have to be this.
But a version of this, something that fits their individual needs, where you can see it, a dashboard, a scorecard, something where you
and you can see that we keep track of the sales over there on Post-it notes. I mean, I'm a big believer in low-tech, analog. We have the bell back before COVID, and all the salespeople worked in the office, the bell would be ringing all day long. Now it's just sad and lonely. But I'm just a big believer in, it makes it more visceral. It makes it more real. It makes it more interactive. I stand here, I literally come into the office sometimes, and I literally will just stand here and I see relationships between things, and I see connections that I would never see if I was just looking in the computer.
Is there anything else financial control-wise that's worth mentioning for a small law firm to consider before we sort of round this out?
So every small law firm should be getting from their bookkeeper, at minimum, a 12-month forward-looking budget. They should be getting a 6-week cash flow projection that shows week by week for each of the next 6 weeks, how much revenue are we expecting to bring in week by week by week by week, and how much expenses are we expecting to have to go out week by week by week by week. Because when you see that number upside down, if you tell me that I'm going to have a cash crunch 6 weeks from now, I can get creative. I can get proactive. I can call a vendor and arrange to pay them a week late. I can call the landlord and say, hey, would you do me a favor and hold my check for a week? I'm just having a little whatever. I can get on the phone and call a client and say, look, I need you to pay me now, not later. I can get on the phone and chase down a prospect and offer to do a little extra work if they'll hire me now. I can get creative if you give me 6 weeks to avert a cash flow problem, a cash crunch, right? You give me 3 weeks, I got less room to maneuver. You give me 3 days, I don't have a lot of room to maneuver. You give me 3 hours, I'm screwed. There's nothing I can do about it. So you want to have that cash flow projection week by week by week, 6 weeks in advance. And any bookkeeper who doesn't suck ought to be able to give this to you. If your bookkeeper can't or won't give this to you, that's...
And most of the programs, whether it's QuickBooks or whatever else, can pull this out pretty dang easily. As far as at least some of the initial reports that can tee that bookkeeper up for success.
The cash flow projection, the bookkeeper needs to have a conversation with you and say, what are you expecting each week? I mean, you should be having a conversation with your bookkeeper every month about the next 6 to 8 weeks. So budget variance report. That's a comparison between what you were projecting was going to happen in the month
versus
against what actually happened in the month. Your bookkeeper gives you this. The third column is the percentage of difference and the dollar amount difference. It's 100% over budget to the tune of $3. Who cares, right? Yeah. It's 10% over budget to the tune of $10,000. Maybe I want to pay attention, right? So you got to look at both of those. And then the next column is the column where the lawyer puts on their discovery hat, puts on their cross-examination hat, puts on their creative thinking hat, and says, why were we off? No bookkeeper can give you the answer to this. No CFO can give you the answer to this. Once you have a professional legal administrator and you've got a $150,000 professional legal administrator, maybe a $150,000 a year CFO, maybe they can kind of propose some answers to you. But you as the owner need to take responsibility for figuring out, or at least a hypothesis for why we're off what we thought it was going to be. For good or for bad, it doesn't matter. We need to know why. Because the last column on the budget variance report is really where the money gets made, and that's, and what are we going to do about it? How much were we projecting? What actually happened? Dollar difference, percentage difference. Why do we think? And now what are we going to do about it? So budget variance report, cash flow projection. You want to get an AR report, accounts receivables report. That should be aged, and not just aged 30, 60, 90, 120, but it should be aged 30, 60, 90, 120 with the names of the clients and the amount that equal the total.
So you can actually see it, follow it, and know who you have to go up, basically go track down.
So look at this. So if Mr. Adams owed me $5,000 last month, he ought not owe me $6,000 this month. If he owes me $6,000 this month and he owed me $5,000 last month, it means someone has been doing work for free at my expense. Someone has been embezzling my money. I'm not joking.
Yeah.
I'm going to break this thing. I get pissed off about this. Someone has been embezzling my money. Someone has been incurring costs to my business so that Mr. Adams would like them. Because someone didn't want to have a grown-up, mature, responsible conversation with Mr. Adams, so instead they said, oh, you know what? I'll just let Rjon keep paying me to do work for you for free so that you like me. This happens in law firms everywhere.
Running a business, not a charity.
I'm telling you, if you're not looking at your aged accounts receivables report with the names of the clients, you are blind to what is almost always happening anytime you have associates or paralegals working for you. It's easier for them, it's easier for the employee to give you the bill than to give it to the client.
Yep.
All right, so budget variance report, cash flow projection, accounts receivables report, work in process report. That is where you're saying this is how much work has been done, but not yet billed, and should be ready to be billed this month or next month or the month after that.
It's in progress.
It's work in process, a WIP report. And this is what allows you to project revenues into the future.
Yep.
And last and not least is a cash balance. How much cash have you got in the operating account? How much cash do you have in the trust account? And if you're using profit first, you should be using profit first. then how much do you have in your set aside accounts?
Yep. What is Profit First, just so the people who may not know what it is? Mike Michalowicz, Profit
Mike
First.
Michalowicz, Profit First.
It's a,
I guess now's the time to mention Profit First for Lawyers is coming out soon. I wrote it. Profit First. What is Profit First? Just read the book.
yeah.
It's great. No, for real. It's such a simple way to transform your relationship with your law firm and to turn your law firm into a really more predictably profitable business.
Yep. Yeah. Anything else that we should touch on before we close this out for the day?
I think we could probably spend
Hours
on all of this because each of these is based on a whole bunch of different ideas and concepts, but this is, I think, a pretty good introduction. Just put it out where everyone can see it. Don't let it hide inside your computer. Don't let anyone turn it off. Don't let anyone close the window.
Well, you're also going to be more likely to update it if you actually see it ongoing, as far as if you are a 1 or 2 person shop.
So we moved into this office 3 years ago. And when we moved from the old office to the new office, my low-tech, Luddite, all of my super techie employees were like making fun of, they make fun of this, by the way. They made fun of my Luddite low-tech Post-it note sales tracking system. And so they didn't translate it from the old office to the new office. And guess what happened to our conversions? They went down. And then guess what happened when I put the Post-it notes back up on the wall? They went back up. It's just amazing how simple little things like this, low tech, low cost, it makes a huge difference.
Insight, top of mind, out of sight, out of mind.
There you go.
Yeah. All right. Well, hopefully you enjoyed yet another edition that we did today on financial controls. And as usual, looking forward to seeing you next time.